Hi guys, it's Michelle Knight from Miss Bookkeeping, and in this video I have a visual representation of why you need more than just one business bank account. In my experience as a business owner, you need a minimum of 2. Through trial and error, feel like 3 is best. Any more than 3, you end up doing more, I suppose, bookkeeping admin. That's really necessary. So I have a bag of lollies here that I thought I would use as a little bit of a representation of these bank accounts and how they flow through to these other pots. So each of the plates represent different entities and different bank accounts, noting that I've got 3 bank accounts set up within this business and how that all works. So this is our cash money pot, being my little licorice twist. And either on a routine basis, you'll have money coming into your bank account, whether that's, daily, weeknightly, fortnightly or monthly. And what I like to train my clients in is actually putting money in the right pots. So generally speaking, everyone will have their income and expenses, or what I like to call their everyday account. So this is where your income and expenses will flow. And on a routine basis, whether that is on a weekly, fortnightly or monthly basis, you'll start to transfer funds into what I like to call a tax savings account, otherwise nicknamed the taxman account or the do not touch account, because these are designed to cover your GST, pay-as-you-go withholding, pay-as-you-go installments and superannuation. So we have money coming into the bank. We slowly, maybe on a weekly basis, transfer pots of money across to our tax savings account. And if we do have a little bit of cash surplus, we have our quote-unquote savings account. I also like to nickname it the rainy day fund. So if we do have surplus, we might put some money in there for a rainy day, future investments, this, that or the other. Down here we have our wages / drawings, depending if you're a sole trader or a company, depends what type of setup, but that's essentially you as the business owner, your little pot. This plate represents the ATO, where you obviously do your BASs / IASs and lodge your tax returns. And here is my little pot for super funds. Throughout the month, the quarter, you'll have your little pots of money sitting in your various bank accounts. You'll, transfer some funds to your personal account as your either wage or drawings. Now, on a minimum quarterly basis, and this depends on how frequently you lodge BASs, but for a lot of small business owners, they'll lodge on a quarterly basis, where you'll have to pay the ATO their money for GST, pay-as-you-go withholding, and potentially some PAYGI or pay-as-you-go installments. So because we are being diligent in keeping track and keeping good habits of taking money from our everyday account and stockpiling it into our tax savings account, every quarter when we have to, 1, pay our BASs, and 2, if we've got any employees or pay super for ourselves, pay those money into the super funds, we can do that on a quarterly basis without having the stress that we do not have any funds. Each quarter, we're going to pay the taxman his money for his BAS. We're going to pay the taxman money for super funds. And depending on if you have to pay your pay-as-you-go installments, tax returns, if we've got some extra money sitting there, we can go ahead and potentially pay any tax payable. Now, these are all, it's just a rough example. You'll be asking, Michelle, but how much money do I put in here so that I can pay the tax man here? Well, it all depends, and this is why it's really important to, 1, have, I suppose, some sort of structure set up, and 2, to get really good clarity on your figures. And the best way to do that is to engage with your accountant or bookkeeper to set up some really automated savings transfers to make sure that, 1, we can pay ourselves, 2, we pay the O, and 3, pay any other important obligations. So I hope that video was helpful, and I'll see you in the next one.